Every U.S. investment account explained in 5 minutes checking and savings accounts. These are not investment accounts, but they are the starting point of every financial system. A checking account handles movement. A savings account holds short-term security. The money here is liquid and protected, but it does not grow in any meaningful way. Inflation quietly reduces its value over time. This is where emergency funds live. This is where stability lives, not growth. High-yield savings accounts. A slight upgrade. These accounts pay more interest than traditional savings, often through online banks. They still won't make you wealthy, but they slow the erosion caused by inflation. This is where idle cash belongs when you need safety and access, but don't want money completely asleep. Taxable brokerage accounts. This is the most flexible investment account available. You can invest in stocks, ETFs, bonds, mutual funds, and more. There are no contribution limits. You can withdraw at any time. The cost of this freedom is taxes. Short-term gains are taxed as ordinary income. Long-term gains receive favorable rates, but they're still taxed. This account is about control, flexibility, and opportunity. 401k, the backbone of American retirement. Contributions are typically pre-tax, lowering your taxable income today. Many employers offer matching contributions, which is one of the best deals in finance. That match is instant return. The downside is access. Withdrawals before retirement age trigger penalties and taxes. A 401k is powerful but rigid. It rewards consistency, not creativity. Roth 401k, same structure, opposite tax strategy. Contributions are made with after-tax dollars, but withdrawals in retirement are tax-free. This account assumes your future tax rate will be higher than your current one. It's about certainty. You pay now to eliminate tax risk later. Traditional IRA. This account gives individuals control beyond their employer. Contributions may be tax-deductible, depending on income and workplace coverage. Investments grow tax-deferred. Like a 401k, the penalties apply for early withdrawals. The IRA is quieter but flexible. It's ideal for focused long-term investing. Roth IRA, one of the most powerful wealth-building tools available. Contributions are after tax. Growth and qualified withdrawals are completely tax-free. There are income limits which restrict access for high earners. Because of that, time becomes the real advantage. The earlier you start, the more powerful this account becomes. Backdoor Roth IRA. For those who earn too much to contribute directly to a Roth IRA, there is a workaround. A backdoor Roth involves contributing to a traditional IRA and converting it to a Roth. The rules are specific and require care, but the benefit is access to tax-free growth even at higher incomes. SEP IRA and Solo 401k, designed for self-employed individuals and business owners. These accounts allow significantly higher contributions than standard retirement accounts. The complexity increases, but so does the potential. If you control your income, these accounts let you scale your retirement strategy aggressively. HSA, Health Savings Account. Often overlooked, extremely powerful. HSAs offer triple tax advantages: pre-tax contributions, tax-free growth, and tax-free withdrawals for medical expenses. If medical expenses are paid out of pocket, the HSA can function as a long-term investment account. After retirement age, it behaves similarly to a traditional IRA. 529 education plans. These accounts are designed for education expenses. Contributions grow tax-free when used for qualified education costs. They reduce the future burden of tuition and can be a strategic part of family planning. Tax strategy matters. No single account is superior on its own. Real wealth is built by combining flexibility, tax efficiency, and time. Taxable accounts provide access. Retirement accounts provide efficiency. Specialized accounts provide leverage. Investment accounts don't create wealth by themselves. They amplify discipline, patience, and consistency. I'll be making more videos like this soon. Subscribe to see them.